What is it telling us, other than the market for existing home sales is broken? People don't want to move because they've got very low rates. They don't want to move because they don't want to lock in higher rates. When does that change?
The home sales struggling principally because of lack of inventory. Consider 1/3 of the property right now are being sold above list price, meaning that multiple offers are still happening. It's just that lack of inventory condition. So how do we get more inventory? Well, certainly the builders are adding inventory, but the way to really get more inventory is for the gap between the current mortgage rate that the homeowners have versus what the market is offering. So if somehow the mortgage rate was to go down to, say, even 6%, I believe we're going to have some degree of pent-up sellers beginning to reach the marketplace. Remember, changing family circumstances, additional child in the family, looking for a different school district, new job at different location. At some point, people want to move even at higher mortgage rate, but the mortgage rate needs to come down.
Lawrence, hi, it's Alix in New York. It's great to have you on the Instant Analysis. What areas within the data, what areas are still the tightest in the existing home market versus ones that are a little bit looser? Anecdotally, I'm in New York, and it does feel like I keep seeing price reductions on existing home sales right now.
Well, in the upper end market, there is some price concession at the upper end. So the multiple offers are happening principally on the mid-price home, moderately priced home. There is a job creation happening, 4 million people working today versus pre-COVID. They want to be an owner. So there is a demand at the low end. Interesting part is that the West region actually suffered more before today's data. After some price decline that was experienced in the West, people are viewing it as second chance opportunity to get in. So the West region actually outperformed other regions in the latest data.
How does this all correct itself, Lawrence? This is the bit that I'm wondering. America continues to underbuild. The new market is doing very well, but it's still not supplying enough homes for Americans. The existing market, nobody's moving because they don't want to lock in higher rates. How long does it take to correct this situation? How long are we going to have to wait before these markets normalize?
Well, you have been underproduction for many years, and the cumulative effect of underproduction is we are short on homes. And consequently, if one looks at the long-term perspective, from year 2000 to today, home prices have risen roughly 180%, while people's income have only increased by 100%. So we have a mismatch principally due to lack of construction. So we either need to provide incentive to produce more or possibly consider temporary tax incentive for some of the mom and pop real estate investors to unleash some of their rental property inventory. Even if we can get, say, 10% of those inventory onto the market, it will greatly loosen the condition.